Welcome back, boys, on this. Sadanand Shetty, as promised, Vice President and Senior Fund Manager of Taurus Asset Management Company, is joining us. Sadanand, thanks much for your time. Well, what's your sense as a person who would be who would have to decide the fate of about 1,000 crores of funds? Would you be in the market buying at these levels, or is this making you scared?
Good afternoon, Lata. Basically, we are clearly positioned our portfolio across a couple of growth sectors where we think incrementally there will be earnings upgrade, and we will not be unduly worried about short-term hiccups in the market. What has been happening since last couple of weeks is that FIs are driving the market in terms of gross FI flow, which is happening in the market. We would generally don't try to time the markets. What we intend to do is basically create an optimum portfolio which will take a full advantage of growth markets. So clearly we allocated our asset according to the various sectors of economy, which we think will do well over the next 12-18 months period of time.
No, Sadanand, from what you're saying, if it is usually FII flow driven, then it tends to be a top-down market. But from what you're saying, you are saying that it is not the top-down market that you will be tracking, but the micro stories. Is that right?
Lada, if you look at last 3 months, what's happening is that currently there are a couple of aspects to this market. Clearly, since the last 3 months, when large caps have driven up by 8% and mid caps roughly around 10%, it's basically the companies and the sectors which has shown us robust earnings. They have actually driven up the markets. But there is another aspect to the market. There is a optimism for the policy actions which is happening with the government of India. If you look at the oil and sector pack or media pack, there are several such sectors which is kind of getting re-rated. So we have at one end oil and gas, second end is a large component which is a robust earnings recovery, which is driving up the markets well. At the same time, we have seen several large cap peers which have significantly underperformed the market as also has moved up in an absolute manner. These are the things which we think will continue to move up as we go forward.
Sadanand, hi, afternoon to you. Just speaking specifically about the individual growth stories, I mean, you did speak about oil and gas as well. In the mid-cap index, in the broader markets, there are many stories, despite the valuations looking a little stretched in the overall sector, there are specific stories that have very attractive valuations for long-term investors. What, according to you, are some of those spaces? Oil and gas apart, that's one you spoke about, but what about the others? What is the spaces that you would now be bullish on?
If you look at Midcap, there's clearly a robust recovery happening in terms of earnings. We clearly are positive on sectors like media, particularly broadcasting within the media space, logistics space, brokerages, several other auto ancillaries, select pharma companies, select banking companies, consumer discretionary companies, and the capital goods company. We believe that earnings growth will accelerate over the next 2 years period of time, which will take care of the valuation which we are seeing currently.
So what about the latest development of the digitalization in the cable industry? How would that amount to, or rather what would that amount to in terms of a growth for the media space? And specifically, what would that bring to specific stocks?
Just to buttress that question a little more, I thought you said broadcast companies. You're not saying television distribution companies.
When I say broadcast, it basically includes cable distribution network as well as the broadcasting companies. In fact, if you look at the recent TRA guidelines, it's actually very revolutionary in sense of that it could become a catalyst to attract investment from FDI as well as portfolio investment. There will be a significant ramification of these guidelines, although the implementation could be challenging, to have such a short span of time. But eventually, if you look at the kind of driver it could create, it could create in terms of capital flow into the sector as well as the subscription growth which could keep coming in. If you look at, there is a gap of roughly 15,000 crores of subscription leakage which is happening in the industry. And if this implementation could negate 50% of that and that coming to industry clearly over the next 2 to 3 years period of time, we could see an incremental market capitalization moving it to roughly around 70 to 80,000 crores, which is substantial wealth creation over the next 2 to 3 years period of time for the particularly cable distribution as well as the broadcasting space in India.
Okay. Well, Sadanand, the other stock index, the other index, sector index that has been buzzing today has been the real estate space. I mean, written off by so many. We've actually noticed that rates in Bombay and the NCR region are a good 20-30% higher than what was considered their unrealistic highs of 2007. Even if you give, the interest rate, an interest rate element, those very prices which we thought were crazy are now looking like, even after doubling, lower than the current price levels at which bids are getting done. Do you think real estate is going to continue to surprise its critics and perform, especially since you yourself said this is a liquidity-driven rally?
So that's a very good question. Let's not make a real estate sector as a pariah of the market. If you look at it globally or even in the Asian market, real estate as a sector is a significant component of economy. When you talk about industry growing or economy growing at around 8.5–9% kind of a growth rate, you need malls, you need residential, you need a commercial places. So fundamentally, there is a growth story in a real estate space. It's about the valuations. If you look at the valuation, most real estate companies or large part of real estate companies still trading at, the valuation, the price point, which were nearly a few quarters back. So in terms of growth rate, we do see that, as the economy picks up, the manufacturing sector grows at around 11%, or service sector, which will grow at around 9 to 10%, you will have a more and more demand. So incrementally, we think, in terms of real estate companies, cash flow will be much better than what it has been in the past, where the stocks have been not revalued accordingly to the market. So we would see, besides real estate as an overall investment allocation, I don't think there is an overweight position on that sector. It may be at the most largely neutral to underweight. We would see more money would be coming into the sector.
So would you want to pick up stocks for us in that sector?
8.5%.
So would you want to pick up stocks in that sector for us?
Now we are constrained by a specific recommendation, but clearly, the companies which has been able to, deleverage its balance sheet substantially at the one end on the financial side, and the other side companies which just keep on delivering, in terms of the square million numbers at every quarter. We would like to look at those companies, whether it's a Bangalore-based specific companies or the large pan-Indian companies, which has the ability to not only, fund their capex, but also continues to deliver in terms of number, largely on the residential place or in the commercial side of the business. We are not unduly worried about, besides, as we need to understand, real estate is also kind of a high beta play, which will keep, showing the upward movement in a FI-driven or fund flow-driven market.
You did speak about the pharma space as well. How is the entire sector looking there, and what kind of a sectoral growth would you outline for the pharma space?
There is no doubts about the long-term growth of pharma sector. But what happens typically and traditionally, if you go back and see several years of high growth markets, pharma considered to be a defensive tend to be underperform overall larger narrow market, which is largely BSE Sensex or Nifty 50. So similar trend we could see. Clearly, we are bullish on, we are not overweight on the sector, but we are bullish on specific play, which is driven by the generic play internationally, as well as the domestic growth stories. Another, the CRAM space, which we think will be a high growth space for this sector, will eventually come back over the next 2 years, where we see clearly growth opportunities. The one end, we have some companies which are trading at a cheap valuation, but for a higher growth. The second, and we also have companies with a high growth, with a high valuation. We clearly are positive on those sectors, but it's not something which we would like to overweight in our portfolio. But we'll clearly have some of the specific opportunity, whether it's in a large cap or mid cap space, depending on the portfolio that we build.
All right. Sadanand, we do appreciate you taking time for us, and congratulations for being voted the best of your kind. Thanks a lot for joining us. Well, we have to take a break, but we have, like we promised you, plenty of companies coming out with numbers. We'll analyze those and probably get some of their managements as well after this break.